Warning, please be prepared for my most important, but possibly my most boring episode. But you know what won't be boring? Your trading account balance. On our last episode, episode 1, we talked about learning some new stock trading terms. And in this episode, episode 2, we'll learn how to set up your online trading account. Now, we're going to talk about taxes as well, and it's a little boring, but it's necessary. Then in episodes 3 to 7, we'll get a lot closer to starting your first stock portfolio. And in the next lesson, we'll learn some good ways to save money and contribute to your existing trading account. Hey, it's David again, and welcome to The Wealth Warrior. Our goal is to demystify investments and show everyone how to become wealthy very simply. Now, in my last episode, we talked about some basic definitions and stock terms like stocks, mutual funds, stock exchanges, and the various trading indices. Please click on the link below to review this information if you require. Also, remember to hit subscribe if you really like this content. Now, I believe the most profitable way to invest is to use direct trading. By trading in this way, you can avoid large commissions or broker transaction fees in assisted trades. Through this course, I'll show you how to make your own great trading decisions, buying and selling, and you won't have to depend on traders to buy and sell stocks for you. In addition, it's also important to trade in a certain way to avoid most government taxes, and we'll review this too. In this lesson, you'll learn how to get help from your financial advisor, the best ways to set up direct trading in your area, the differences in trading stocks in US and Canada, and you'll learn about avoiding taxes on a lot of your investments. Also, if you find this content really useful to you, hit the subscribe button, and let's continue on this trading journey together. Now, there are basically two main ways to trade stocks and mutual funds. First, broker-assisted trading, and the second, direct trading. So most of the time when a broker is involved in a trade, it'll cost you an extra transaction fee. Whatever trading platform you choose, you'll always have the option to have a broker available if required. However, traders need to get paid for their services. They'll have to bill you an extra possibly $25 to $50 per trade, which is relatively high. Okay, stop. Just stop. Well, what we're actually doing here is setting up a trading account. That doesn't mean we'll be trading right away. However, when we do set this up, we want to make sure trading will be right for you when you're ready to get started. Okay? What about direct trading? Well, direct trading comes later. You first need to set up the proper account. We'll be ready to trade in upcoming episodes. Wait, so where's my money going now? Well, in my next episode, we'll cover what to do with all your money and how to save it. Right now, we're setting up accounts to give you the best tax benefit. So perhaps the easiest way to set up a trading account is to make an appointment with your financial advisor at your bank. They'll walk you through step by step on how to get set up. And most of it should be available through online banking. If you have an account at one of the larger US or Canadian banks, these institutions will have their own direct trading software. For example, the largest US banks use the following products. Wells Fargo uses Wells Trade. JP Chase uses U-Invest-Trade. Bank of America uses Merrill Edge. Citibank uses Online Investments. Morgan Stanley uses Access Direct. Now, if you live in Canada, it's a little bit different. CIBC uses Investor's Edge. Toronto Dominion uses TD Direct Investing. Royal Bank uses Direct Investing. Scotiabank uses iTrade. BMO uses InvestorLine. Now, as I mentioned, all of these options should be available through your online banking. In most cases, you can also access these services through a separate login. Your financial advisor can help you with all these details. Now, naturally, you may not want to do business with banks on the list. In these cases, the best option is to speak with the financial advisor at your bank to discuss your options. If you aren't happy with the choices at your bank, you may wish to open an online trading account with one of the other banks on the list. This is possible since you'll never really physically have to be at the institution to actually make the trade. All the stock transactions will be online anyway. Now, if you don't want any of these options, you may decide to use a purely online trading broker or service, which is available to almost everyone. This is a good option, especially if you're at a smaller bank or in Canada, a trust company that doesn't really have direct trading of their own. Now, these are the most popular trading services in no particular order. Charles Schwab is available in the US only, but you can trade in international currencies if you desire. Robinhood, available in the US only, is your second option. E-Trade is available in both the US and Canada, but it has been rebranded as iTrade just for Canada. There's TD Ameritrade, which is only available in the US. Questrade, which is available in Canada only. Now the last two are Fidelity Investments and Interactive Brokers, and both of these services are available in the US and Canada. Finally, if you choose one of these online brokers, ensure you choose an institution from your own country, and this ensures, number one, taxes are properly calculated for your country. Two, trading is not affected by any politics or financial events in the other country. And number three, check broker transaction fees. Some offer fees for different types of trading. To this point, there's a trend towards direct trading transactions for free. I don't personally know the status of all of the companies I've shown above, but I believe that free basic trading is available at least at Charles Schwab and Robinhood. Finally, there's something called fractional trading that is not available with every online broker. Basically, fractional trading allows you to invest in partial shares of a company that you may have difficulty trading due to the cost. As of this writing, one share of Amazon can be as much as $3,000 US, and that's $4,000 Canadian. Fractional shares would allow you to own part of one share of Amazon, making it more affordable to your portfolio, say $25 to $100 instead of the full share. I'm not sure if all these companies participate in fractional trading, but I'm sure that it is available at Interactive Brokers, as I mentioned above. Again, a financial advisor can assist you with any of these questions, and also they'll be able to talk to you about any special services that are available to you as a direct trader. Okay, now let's talk about taxes on some of your investments. I expect that people who watch these episodes and follow my simple trading and investment guidelines will make between 13 and 25% per year on their savings. That's quite a bit. Now, for example, if you invested $10,000 one year,
you would expect to make up to $2,500 by the end of the year. The additional $2,500 will be subject to taxes called capital gains taxes. Now, although I will explain dividends in upcoming episodes, this is also considered stock income and is also subject to capital gains taxes.
These taxes can be avoided to some extent in both the US and Canada. The best way to avoid taxes on the stock market is to put your investments in retirement savings. So in the US, investment should be in your 401k, and in Canada, they should be in your RRSP or Registered Retirement Savings Plan. Now, please remember, when you ultimately retire, you'll have to pay taxes on the money that you earn through this system as income. However, until this date, your stock gains, dividends, and all the other interest you make on your investments will grow tax-free. In both the US and Canada, there is an annual contribution limit on the amount you can put in your retirement savings. This annual limit is pretty high in both countries, so with any luck, you should be able to avoid taxes in most cases. In the US, you can follow the link below to the Internal Revenue Service to determine your contribution limit and any other details. In Canada, you can find your annual contribution limits online in the CRA, that's Canada Revenue Agency, My Account services at, and the link will also be shown below. Also in Canada, the federal government has created an additional savings vehicle called a TFSA, or tax-free savings account. This allows individuals to save a certain amount of income up to a certain amount annually. I won't have the details in this video, but this money can be withdrawn at any time and put back at any time. Depending on your age, your contribution limit varies greatly. Now, you can also find your contribution limit in the My Account service that's shown in the link below. So with all these different ways you can save, you might ask, how does it impact my trading? Well, I'm sure there are differences in every trading platform to allow you to make trading in certain ways. The financial advisor at your bank or any trading institution should be able to help you with these kind of questions. So I can tell you personally how trading has been affected by my online platform. So personally, I'm Canadian, and my bank has created 3 separate trading accounts with my online banking. So I have one bank account for my retirement savings, one for my tax-free savings account, and then I have a third, which is my personal trading account. Now, I'm no tax expert, and there are many tax implications and subtleties of these various accounts that I don't have time to talk about in this, or I'm even qualified to talk about in this video. So please again, contact your financial advisor to answer any of the questions regarding the subtleties of all your taxes for all the basic different types of accounts. So in summary for taxes, if you invest gradually and regularly, you should be able to at least defer some or all of your taxes until your retirement. I think that's a pretty good deal.
Now, before we finish here, I want to do a quick summary of the episode because I know there's a lot of terms thrown at you all at once. So in the first step, we want to set up our online trading account. So the first thing we do is we make a phone call to our bank or to another financial institution and talk to a financial advisor and set up an appointment. The financial advisor at your bank should be able to give you options on setting up different retirement savings accounts, or in Canada, your tax-free savings account. Also remember to go online and check your contribution limits. Remember, you can only contribute so much per year into either a retirement savings plan or in Canada, your tax-free savings account. Your limits will be shown in the links below this video. Finally, once we have set up our account, in my next episode, we'll talk about step 5. Here, we will learn how to make regular contributions that will maximize the benefit for you. So stay tuned, there's lots more good content to come. I'll talk to you later. Bye for now.